What's going on, guys? Today I want to make a quick video discussing another type of strategy that I like to use when trading options. This is another vertical spread, but this spread is called a call debit spread. And instead of puts, like the put credit spread or put debit spread, it involves two calls. Now, compared to the put credit spread, this is a more of a directional trade. This is kind of like buying, just buying calls. That is where I'm making my money from the 150 call in this scenario, compared to selling like a put credit spread. I'm making the most of my money from that put that I'm selling. So that's kind of a more of a theta gang approach, like the put credit spread, similar with the call credit spread. And then the debit spreads, so like a call debit spread and a put debit spread, is more like you're simulating buying, buying a naked put, buying a naked call, and you're going to make most of your money from that directional movement. So this trade, I opened it yesterday when the market did take a big dip after Biden's new capital gain tax proposal. So I thought it was a good opportunity to open this position, and let's go ahead and jump into it here. So it is involving JP Morgan Chase. As you can see here, I opened it for $1 or $100. So with the call debit spread, this is my max loss, right? So if JP Morgan just drops down and it never really goes up much higher than what it is now, that could be my max loss. But do keep in mind, whenever you do spreads, you're selling options. So you're giving someone else the right to exercise an option at any point. So keep in mind ex-dividend dates, earnings dates. Those are all things to consider before ever opening up a spread on any stocks or ETFs. So I checked the ex-dividend date and the earnings date for JP Morgan, and I'm good on those. So I don't have to worry about a early assignment with any of these positions here. So what this involves, though, so I sold the 152 and I bought the 150. So my max gain is 250 minus my debit. So it's 100. So my max gain here is $150 on my max loss of 100. So I'm going to go ahead and jump over to a website. I just want to plug these numbers in so you guys can see this. You want to go to optionsprofitcalculator.com, click on the call spread, come down in here, type in your symbol that you're doing this with, and I believe it was May 21st. I bought the 150 and I sold the 152. Whenever you guys do this, as far as how wide you want to make these, ultimately depends on how big of a position you want to enter. So I sold this for 223. Just gonna pop back here real quick, just so I can get these right numbers, and then bought this guy for 323. Okay, so my debit of 1. Let's go ahead and jump into the calculator here. So this website is really cool. It kind of simulates what this spread is going to be worth based upon the stock movement. So April 23rd is today. JP Morgan is trading around 150. Looks like it did drop a little bit since recording this video. It's around 150.30. So we're somewhere in between here right now. But if it were to go shoot up, this website makes it really cool, and it kind of can simulate and tell you how much the option spread is going to be worth. Now, this is definitely going to vary depending on how long it takes it to accelerate, but this just gives you a good idea of where you might get a max loss. Obviously, if it's not above my short position, I will be not getting the full amount, the 150 return. If it breaks somewhere in between there, I definitely recommend closing it. I'll never let my option go all the way to expiration if it's in between both of these, just because there's chance of in the after hours this option getting exercised and then this one not getting exercised. So your max loss could be a lot more than $100. I know last year that happened to someone with Tesla. Huge mistake. So always close these type of spreads before expiration, especially even if it's like right in between here, just because one of them can get exercised and you can be in big trouble there. So yeah, I mean, this website's really cool. I'll leave a link to it below, but pretty much it just tells you what your max risk is theoretically and what your max return is. So really cool to punch in those numbers and kind of just analyze where I need to be to get in and out of these positions. So I hope that helped, guys. The Robinhood platform, I'll show you real quick how to open one of these. So you'll want to go to the expiration date you're looking at. You'll want to sell a call, and then buy one below it. And just to confirm that you did the right type of trade, make sure it is a call debit spread right here. And that's pretty much it. So then you click continue and you buy. Like I mentioned earlier, this is a 2.5 wide spread, but whenever you select these strikes, you'll have to do your own research and figure out how wide you want to make it. So this is a $1 wide, but it's in the money, so it can technically get exercised at any point. So do keep that in mind there. All right, guys, that's pretty much it for this video. Thanks for watching. If you have any questions or concerns, feel free to leave them below. And remember, I'm not a financial advisor, so this can be a very risky investing strategy. So I always recommend paper trade it until you really understand the risk and how you can get in and out of these trades. Like I said before, please close your spreads before expiration. Even if it gets close to expiration, I just like to close it just for the peace of mind of early exercise happening. Ex-dividend dates are really important to keep in mind too. So if you are doing this on dividend paying stocks like JP Morgan, or ETFs have ETFs pay dividends too, so keep that in mind for the ex-dividend dates on those as well. That's pretty much it for this video, guys. Once again, thanks for watching.